Hello everyone. Welcome to the economy quick revision session through MCQs. So we will see few topics of economy which are relevant and there is a chance of question through the MCQs. So you can pause the video, you can solve the question and then you can see the explanation or the answer, right? So let me share the screen. Yeah. So let's start with the first question. The question is about which of the following statements about GDP calculation is correct? They're asking about the correct statement related to the GDP, right? So gross domestic product excludes the production made by the foreign nationals in India. So this is the first statement. Gross national income includes production made by foreign nationals in India. Gross value addition does not include any taxes or subsidies. GDP at factor cost includes production taxes but not product taxes. So among these statements, which one is correct? Right? So let's take the first statement, that is gross domestic product excludes the production made by the foreign nationals. So this is a wrong statement. Within Indian territory, whatever the production that has happened, either Indians or foreigners, foreign nationals, it is included. So first statement is wrong. Second statement, gross national income includes production made by the foreign nationals. No, gross national includes only those citizens of India who produce within India or the outside of Indian boundary. So the together, if it adds on the total production made by Indian citizens, that is called as a gross national income. So this is also a wrong statement. Now, if you see the option D, GDP at factor cost includes production taxes and product but not product taxes. So there are three things, the GDP calculation, GDP at factor cost, GDP at basic prices, and then GDP at market price. So GDP at factor cost means the total production that has happened without including any production or product taxes. So what are production taxes and what are product taxes? This is also important. Production taxes are those taxes which are levied even before the production, like land tax, or you can say stamp duty, right? So it is not include any production of goods like registration fees, whatever you are starting the business, even before your actual production of goods, whatever the taxes that are levied, those are called as production taxes. And whatever the taxes that are levied after production per unit, that is called as the product tax, right? So GDP at factor cost does not include any production taxes or any product taxes or production subsidies or product subsidies. It is a plain thing what we have paid for the factors of production, right? Four factors of production, that is entrepreneurship, labor, land, and capital. So whatever those forces of production are there, so whatever the cost that is incurred is the factor cost. So it does not have any production taxes or product taxes. Whereas GDP at basic prices, it includes production taxes and production subsidies. So even before producing goods, there will be certain subsidies given by the government to certain business which are environmental friendly, something like that. So those are called as production subsidies. And there are also taxes like tax registration fees, stamp duties and all. Those are production taxes. So GDP factor cost plus production taxes, if you add, that is called as the GDP at basic prices. And then if you add product taxes and also product subsidies after the actual production of goods and services, that is called as the GDP at market price. So GDP at factor cost includes production taxes. Wrong. This does not include any of the things, any taxes or subsidies, just the plain payments made for the forces of production. So this is also wrong. Option C, gross value addition does not include any taxes or subsidies. Yes, gross value addition means whatever the production that has happened minus the intermediary cost, like whatever the raw material inputs, all the intermediate cost that has been eliminated, removed. So that is called as the gross value addition. There is also no taxes or subsidies involved in the gross value addition. It is just the plain thing that has been added by the any industry, right? So answer is C. So we have revised the GDP at factor cost, basic prices, all these things. So you need to keep in mind on that. Next one, which of the following is included in the capital budget of the government of India? So they are asking about which are all part of the capital budget of the government of India. So expenditure on acquisition of assets like roads, building, machinery, etc. Second one, loans received from the foreign governments, right? Loans received from the foreign governments. And the third is loans and advances granted to the states and union territories. So they are not asking about the capital expenditure or capital revenue or what you call revenue expenditure or capital expenditure or what you call receipts. They are not asking any individual things, rather they are asking about the total capital budget, which comes under the either capital expenditure or capital revenue, right? So this, let's see, we will discuss briefly, or we'll see, we will come back. We will answer this and then we'll again come back after explanation. So expenditure on acquisition of assets and roads and buildings, it is part of capital expenditure. So it is nothing but the capital budget. Loans received from government. So these are nothing but the liabilities that has government created or debts that government has created in a long-term manner. So that is also under the capital revenue. So it is a capital revenue, but yes, this is also the capital budget. Loans and advances granted to the states and union territories. So this is also considered as a capital expenditure, and hence all the three is part of the capital budget. So answer is D. Let's see the explanation. So this is the government budget. We have a receipts and then expenditure. So we have a within budget, we have receipts and then expenditure. Within receipts, we have revenue receipts and then we have what you call capital receipts. So within receipts, we have revenue receipts and then capital receipts. And in expenditure part, we have capital expenditure and revenue expenditure, right? So that is the budget, the components of the budget. Now, what are receipts and what is revenue? What is the difference between the receipts and then revenue? Receipts means whatever the government has received, everything in that 1 year. That means it is not only about the one-time payments like taxes or non-tax revenue, but also it includes the liabilities or the debts that government has taken in that particular year. Whatever the government has received, including the revenue plus also the debts that government has received from foreign nationals, so that is called as the receipts, right? And within receipts we have a revenue receipts, which are one-time payments, whatever the government will get in a one-time manner, like tax revenue, non-tax revenue, which no need to pay back. Those are called as the revenue receipts. So receipts is a bigger circle. Within that, a revenue receipts is a small part, which no need to pay back. And there is also capital receipts. We have a capital receipts within receipts. These capital receipts are nothing but whichever the government has created assets or government, it is not capital expenditure, it is talking about the capital receipts. So capital receipts means whatever the government has either created the liabilities. Don't confuse capital receipts. I am again coming. It is not capital expenditure. We will discuss that in the expenditure part. Capital receipts means whatever the money that government has received in terms of either by for creating the liabilities or debts like loans, right? Or advances from other countries, whatever the debts, those are part of capital receipts. That means we need to pay back. Or it also includes the loss of government, what you call assets, that is PSUs, privatization. So capital receipts includes those liabilities government has created, either liabilities or government lost assets, the money received by losing the assets, like privatization of PSUs. So those are called as a capital receipts. And capital expenditure means whatever the government that has been doing expenditure on creating assets or government advances to the state governments or union territories for creation of the assets. That is also the capital expenditure. Now, revenue expenditure means whatever the interest that government has to pay back to the previous loans, right? That is nothing but the revenue expenditure, also salaries, defense expenditure. These are all part of the revenue expenditure, right? So capital expenditure means creating assets or giving advances to the states for creation of assets, right? Now, if you see the second statement, loans received from the foreign governments is nothing but the part of capital receipts. We are receiving now, but next year we need to pay back with interest. All right. So all this is capital expenditure. This is capital expenditure. This is capital receipts. So they are asking about the capital budget, and hence answer is D. Next question. There has been a persistent deficit budget year after year. which actions of the following can be taken by the government to reduce deficit? So it is also from the budget chapter itself. They're asking what are the things that government can take to reduce the deficit. Reducing revenue expenditure, we have just taken this, we have just discussed this. So revenue expenditure is the one which does not create any assets. And in future also we are not going to get. It is just a one-way payments to the others. So they have to reduce it. So first one is correct. Then introducing the new welfare schemes. No, we cannot. If you are introducing new welfare schemes, we need to do a lot of expenditure. So this will create again a deficit. So 2 is not possible and you can eliminate. Rationalizing subsidies. Yes. Rationalizing means adjusting and reducing the subsidies wherever it is required. We need to do the subsidies, and wherever it is not required, we have to take back. So third is there. So we got the answer C. And fourth one, reducing import duty. Yes, so this is not possible if you are reducing import duty. That means you are losing the revenue and it will increase deficit. A very direct question, but a conceptual question. Fine. So answer is C. Next one about some fact related to the budget. They have given 4 names: John Mathai, Moraji Desai, Dwarkanath Deshmukh, Mitchell Awkward, and they have given 4 elements to match up. First, budget of Republic of India, recommended separate railway budget, presented first in term budget, presented the budget highest number of times. So this very popular one presented the budget highest number of times, that is Morarchi Desai. He was the finance minister during the Congress. He has presented 10 times. So 2 should be D and we got the answer. 1 is A. John Mathai, first budget of Republic of India after Constitution. John Mathai has put forward the budget. Then 2 we have seen. 3 C, presented first interim budget. In 1952 we had an elections. Yes, 1952 we had an election. So it was interim budget. First interim budget was presented by Dwarkanath Deshmukh. And Mitchell Awkward, who recommended the what you call separate railway budget in 1924, right? So answer is B. You can see quickly. First Indian budget was presented by James Wilson in 1869. Right, so he was the finance minister then, and he's the first one to present the budget. And first budget after the independence in 1947 itself, R.K. Shanmugam Chetty, he was the one who presented the first budget. Right. Next one, first budget of Republic of India, we have just seen, that is John Mathai, and then Mr. Deshmukh. Right, so Deshmukh has presented the Dwarkanath Deshmukh has presented the first interim budget, and Morarji Desai has presented the highest number of times of budget. So 1957 to 1963, again 1967 to 69. So total 10 times he has presented the budget. Okay, so this is about the budget thing. Yes, in 1921, British appointed William Mitchell Awkward Committee to see if there is requirement of the separate railway budget, and yes, it has recommended the separate railway budget. Anyhow, it was discontinued after Bibek Debroy Committee has recommended to discontinue it in 2016. So from 2017-18 financial year, we don't have any railway budget. Next one, which of the following is a or indirect taxes? They are asking which one are indirect taxes. So what are direct taxes? Direct taxes are those taxes if the government is directly collected from the source, like if the people are directly paying it to the government. So income tax, corporate tax, these are the ones which you directly pays to the government. There is no intermediary. If there is apart from direct taxes, if you want to know about the indirect taxes means there is some intermediary. For example, you are buying a pen, you are buying a chappal. So you are not directly paying tax to the government. You are paying to the seller, and then seller in turn paying to the government. That is called as the indirect taxes. So there are intermediaries in indirect taxes, whereas there is no intermediaries in the direct taxes. So goods and service taxes, yes, you are not directly paying to the government. You are paying it to the seller. So one should be there. So can be eliminated. Custom duty, yes, custom duty is also you are not directly paying to the government, right? Imports and exports, you are indirectly paying it, right? So for example, you are buying the iPhone, you are not directly paying the tax to the government, either you are paying it to the iPhone company, and then in turn iPhone will pay to the government. So custom duties is there. Then capital gains tax. Capital gains tax means whatever, if you have or bought some asset this year, right, for 5 lakhs. After 4 years, because of the market demand or because of the land demand that in that particular locality, it has jumped to the 20 lakhs. So 15 lakhs, of course, they will consider inflation and see in this 4 years how much inflation has added, and remaining the profit that you have got will be taxed, which is called as a capital gain tax. So you directly pays to the government. So 3 should not be there. So you got the answer 1 to 4. Yes, service tax is also an indirect tax. You are not directly paying to the government. So answer is C. Yes, list of taxes. You can check here as well by pausing the video. Next one, which one of the following is one of the maturity periods of T-bills, treasury bills? So among the given 4 options, what is actually a single one option is a maturity period of T-bills: 184 days, 368 days, 270 days, 91 days. So answer is 91 days. You can see here about T-bills. T-bills are the short-term bonds released by the government within 1 year, right, to get the immediate money from the market. So it is released on the face value. So there is no interest at all. If the bond is for 1,000 rupees, it is auctioned by RBI on behalf of the government, starting from 700, 750, 800. So they keep on auctioning, and whoever buys the maximum price. Nobody will buy it at 1,000 rupees, because they will not get any profit in it. So it may stop at 950, 960, something like that, right? So the extra 40 rupees that you will get after those days, after the maturity period days, right? So there are 3 maturities in treasury bills: 91, double times 182, double times 364. They are issued at a discount to the face value. So based on the auction maturity period, they will get it. Now available minimum of 25,000, and in the multiples like 25,000, 50, 75, 1 lakh. So this is the available of the treasury bills, right? So this is about the treasury bills. Next one, FRBM Act 2003 was introduced with an aim of promoting tax collection for the government, to constrain the role of RBI in auctioning the government securities, improve the management of public funds, merger of government bonds. So the answer is improving the management of public funds. It is not to promote collection of taxes or merger of government banks, or it may seems to be the B as correct answer, but there is no constraint as such directly. Yes, indirectly there is, but the most suitable answer is to improve the public funds, management of public funds, by constraining certain things like fiscal deficit, revenue deficit, by keeping certain targets, right? For also debt to GDP ratio, all those targets, by keeping it, the FRBM Act want to manage the public funds in a much better. Next question, consider the following statements. Inflation benefits debtors. Inflation benefits the bondholders. Let's see this. Debtors means those who take the debt, right? Creditors means those who give the money. Say, for example, in 2020, during COVID, I have taken a loan, right, of 1,000 or 10,000 rupees for 3 years. Now I need to pay 10%. That means 11,000 I need to pay after 3 years. But because of inflation, the quality of money, the strength of money has decreased. So whatever I used to buy for 1,000 rupees, now I need to spend 1,200 rupees. But as I have already have an agreement with the creditor that I will pay this much, we are not paying any inflation. So debtor will benefit and creditor will be affected. So inflation benefits debtors, that is correct, right? Inflation benefits bondholders. So I'm holding the bond. That means I have given money, right? So for example, I'm a bondholder. I have received a bond. I have given money to the some person in 2020. After 3 years, I will be getting 1,000 rupees as percent of the interest in that bond. So as an agreement is already fixed, I'm not going to get any inflation. If there is a higher inflation, I'm not going to get it. So bondholder here is losing, and then whoever has taken the money by giving the bonds, they are benefiting. They are not paying any extra inflation because agreement was already done. So answer is 1 only. Next one. Which of the following have occurred in India after its liberalization of economic policies in 1991? Share of agriculture in GDP increased enormously. Share of India's exports in world trade increased. FDI flows increased. Indian foreign exchange reserves increased enormously. So what are all the possible things? We all know share of agriculture actually has a very much reduced. It's just 15 to 16% currently, which was earlier of 40-50%. So first statement can be eliminated. Right? And 2-3 is there. Yes, share of India's exports increased, FDI is increased, and foreign exchange reserves also highly increased. Right? With 10 times, 15 times it has increased. So this is also correct. So answer is B. Currently, we are having 10 months of import substitution. We have so stored what you call these dollars for 10 months. So India is in a safe situation. Next question. Which programs given the slogan of Garibi Hatao? 7th 5-year plan, 3rd 5-year plan, 6th 5-year plan, 5th 5-year plan. It is 5th 5-year plan, right? So very simple question, but that is not my intention. I just want to give you of quick revision. First 5-year plan, overall development of agriculture. Second one, Mahalobis strategy, industrial development. Third 5-year plan, self-sufficiency in food, self-sufficiency in economy, right? And then fourth 5-year plan, self-reliance and sustained growth. Fifth 5-year plan, removal of poverty. Sixth 5-year plan, improvement in infrastructure and agriculture industry. Seventh 5-year plan, main focus is modernization and increase in employment opportunities. 8th 5-year plan, human resource development. 9th 5-year plan, rural development and decentralized planning. 10th 5-year plan, increase in investments. 11th 5-year plan, overall development of people. 12th 5-year plan, sustainable development. So these are the 5-year plans. You can revise quickly. Next, disguised unemployment generally means that large number of people remain unemployed. Alternative employment is not available. Marginal productivity of labor is 0. Productivity of workers is 0. So disguised unemployment means working more people, but the productivity is 0, right? Like agriculture is example, the family labor. 10 people are deployed in 1 acre, but there is no increase in productivity. They are just working for sake of employment. So marginal productivity is 0. So answer is C. You can see different types of unemployment. Frictional unemployment is a situation where one person shift from one sector to other sector, like between shifting the jobs, there is a time period. So that is called as a frictional unemployment, whatever the unemployment condition between switching the jobs. Disguised unemployment, we have already seen marginal productivity is 0. Structural unemployment means the structural changes in the economy. Like from software, we are moving to the artificial intelligence. There is a structural change. And before health insurance reforms, we were focusing on agriculture. But after that, we have changed the structure of economy by shifting towards the service and manufacturing sector, right? Then cyclical unemployment, that means economy grows in a cycles form. It will increase and then dip, increase, dip, increase, dip. So in a cycles format, it will increase and decrease, right? So that is in such cases, if unemployment is created in the dip cycles, that is called as a cyclical unemployment. Seasonal unemployment means whatever the off seasons. For example, the farmers are more active in the monsoon season, and after that, there is no employment. So that situation is called as seasonal unemployment. Next one, which of the following is a feature of primary market? So primary market, okay, let's see the options. Existing shares are the only ones that can be traded. Prices are determined by the securities demand based on demand and supply. The stock exchange allow for both buying and selling of securities. Company sells securities directly to the investors. So among this, which one is a feature of primary market? If you see, primary market is a market where the bonds are released for the first time. So a company initial public offering. So we are giving 49% of our company shares for the first time into the market. So there is no trading of security, trading of any security is just a buying happens. There is no selling. You cannot sell in the market. You can buy the company's bonds. That's all. Initial. So in the secondary market, you can sell. So after buying the bonds, if you don't want, you can sell it in the stock market. So stock markets is an example of secondary markets where you can trade, right? But in case of primary markets, you can only do buying, right? So what is okay? Let's see the difference also. In the primary market, there is a sale of securities by new companies, right? Or further new issues of securities to the investors. In case of secondary markets, there is already an existing share which you can trade. And in primary market, company sells security directly to the investor, whoever want to buy those bonds. There is no exchange and all. Whereas in secondary market, we have a stock exchanges, investors exchange is possible. The company is not involved in any way. It is just a market based on the market fluctuations. The bonds can be traded. Primary market allows only purchase of securities because this is the first time happening. It does not allow any sales because only the company itself is directly selling it. So you cannot sell it to the anyone. That will become a secondary market. Here, there is a possibility of selling your securities to other people. Company's management and management determines the price. Whatever the amount of price of each share is decided by the company itself. Whereas in secondary market, it depends on the market. And in primary market, it does not have any fixed geographical location. Location in a specific locations will be there, completely organized for trading, right? Now, if you see which of the following is a feature of primary market, existing shares are the only ones that can be traded. No, the new ones only are the ones which can be bought. Prices are determined by the demand and supply. No, it is decided by the company itself, which is releasing. Stock exchanges allow for both buying and selling. No, stock exchange won't be available here. It is just buying happens. Company sells securities directly to the investors. So this is the correct answer, D. So they can directly sell it to the investors. Fine. Next one, in the context of balance of payments, which of the following is part of capital account? Import of service, export of goods, foreign investments, remittances. So whatever the transaction between country with other countries is called as the balance of payments account. So if it is less than 1 year, it is of current account. If it is more than 1 year, it is called as a capital account. So imports, exports, and remittances, these are all calculated in the short term, whereas foreign investments are over the period. Like it is just not for 1 year, but it is for 10 years, 15 years, 20 years. So this is considered as a capital account. So you can see here in the current account, we have income receipts and payments, that is remittances. Unilateral transfers are the remittances, income receipts and payments made by others to us, and then export and imports of services, exports and imports of goods. So these are all current account. Capital account, borrowing and lending, investments, that is FDIs, FPIs, change in foreign exchange reserves. All these things part of the balance of payments. Next one. The famous Marrakesh Agreement is related to which of the following? World Trade Organization, World Intellectual Property Organization, World Economic Forum, World Bank. So Marrakesh Agreement has led to the formation of WTO, World Trade Organization. Okay, if you see, before that, we are having a general agreement on tariffs and trade. GATT is an international organization which was established in 1948. So it was giving the basic guidelines. It is not a binding treaty or there is no dispute mechanism. It is just a element to promote the trade, right? So later it was in the Marrakesh, the countries have met and they have signed, they have decided to replace this GATT with the World Trade Organization through Marrakesh, right? And this is the world largest international economic organization with 126 member states representing 98% of global trade. So USA is not a member of WTO. Fine. So every 2 years, biennial meetings happens based on the finance minister meeting. So that is called as a minister conference, which is the highest decision-making body under the WTO, right? And ministerial conference happens, as I said, for every 2 years. So that's why this 13th edition was recently happened in Abu Dhabi, UAE. So two countries, Comoros and Timor-Leste, were the two countries which were, became part of this WTO. So these two are the two new countries. So you have to remember. Next one. Arrange the following countries with regard to stock markets from largest to smallest. India, USA, Japan, China. Among this, what are the largest from large to smallest? So largest market is USA, right? So two should be there, and then China, and then Japan, and then India. All right. So 2, 4, 3, 1. Answer is C. The context is recently India overtook the Hong Kong as the world's fourth largest stock market. Earlier, it was Singapore which was having the fourth, but now India is in fourth rank. Remember, this is an important fact. According to data compiled, India's exchange was up to $4.33 trillion with regard to Hong Kong. It is just 4.29. So it is not just, we cannot say, it is also fifth largest. Top three are USA, China, and Japan. This is the current affair. Next one, about 16th Finance Commission. Again, one more current affairs related to the 16th Finance Commission. It was constituted by President of India in pursuance with the Article 281. The government has appointed N.K. Singh as the chairman of 16th Finance Commission. The 16th Finance Commission recommendation would cover the period of 5 years commencing from April 1, 2026. Commission's work involved redressing the various vertical imbalances between taxation powers, expenditure responsibility of centers and state respectively. So first statement is correct. It is constituted by President under Article 280, Provision 1, Subclass 1. It has not appointed N.K. Singh. Rather, N.K. Singh is the chairman of 15th Finance Commission. Now we have Arvind Panagaria, who's a former vice chairman of the Niti Aayog. So second statement is wrong, and you got the two options can be eliminated, A and C. Now 3 is also correct. It covers from the period of April 1 to 2026. And the works involves redressing the vertical imbalances between the states and center and recommend according to the distribution. So 1, 3, and 4 is the answer. D. Yes, you can see here the details also. Fine. Next question. Which of the following statements about domestic systematically important banks is incorrect? They are saying incorrect statement. These are the banks systematically important to their size and cross-jurisdiction activity. First statement. They are declared by Bank of International Settlements. They are declared based on the Basel Committee on Banking Supervision Framework. As of May 2024, there are only 3 banks which are part of, this systematically important banks. So out of this, first statement, it is correct. They are having good size and then cross-sectional jurisdiction. So this is correct answer. They are not declared by Bank of International Settlements. They are rather declared by Reserve Bank of India, Central Bank, based on the Basel Committee on Banking Supervision, which was appointed Bank of International Settlement, right? So third statement is correct, but second is wrong because it is done by RBI. And at present, we have 3 banks only, SBI, ICICI, and HDFC. So this is also correct. So answer is B. Project Gaia, recently seen in news, launched by Bank of International Settlement, was aiming at. So this is a very direct fact. You can read the options, pause the options, and then you can answer. The answer is B, to facilitate the analysis of climate-related risks in the financial systems. So answer is B, which is a direct one, right? Next one. Recently, Vocal for Local initiative to promote grassroots entrepreneurship and self-reliance was launched by World Bank, Niti Aayog, Telangana Government, Ministry of Commerce. So it is launched by Niti Aayog, Vocal for Local initiative, which aimed to promote the local goods, local manufacturing, and then to encourage the entrepreneurship in developing the local goods, right? So this is of Niti Aayog. Answer is B. Next one, which of the following is a major objective of launching asset reconstruction companies in India? To create assets by enhancing the capital expenditure by the state and central governments, to reduce the manage the non-performing assets, to regulate real estate business in transparent manner, to streamline the flow of bank loans to selective sectors which can create assets in India. So very popular one, asset reconstruction companies are launched to manage the non-performing assets. Right? B. Answer is B. But yes, we will quickly revise what are non-performing asset. If you have taken a loan, you have to pay the loans, EMIs every month, right? So if you are paying it for every every month regularly, then there is no delay, it is called as a regular. And if it is not paid for more than 30 days, it is considered as under special mention accounts. If it is beyond, if it is between 1 day, that means 1 day delay. After 30 days, you did not pay, and the first day was started, you did not pay. So 1 day to 30 days, if it is delay, then it is called a special mention account 0. And 31 to 60 days, so if it is up to 2 months delay, then it is called a special mention account 1. If it is delay up to 3 months, it is called as a special mention account 2. Now, in case of non-performing assets, so they are not considered as a non-performing asset until up to 3 months. It is just considered as a special stressed assets. Stressed assets. Among non-performing assets, if it is more than 90 days, then it is considered as a non-performing asset. And substandard asset, if it is up to 12 months delay. And if it is beyond 12 months, then it is declared as a doubtful asset. And if it is feels that there is a difficulty of recoverable, there is no possibility that it is won't be able to come back even beyond 1 year, then it is called as loss asset. So this is called as a non-performing asset, and these are called as a stressed assets, right? So this is also important. Next one, which of the following are among the 8 core industries? Cement, fertilizers, shipping, refinery products, and textiles they have given. So you can pause and answer. So if you see, these are the 8 sectors: petroleum and refinery, highest weightage, then electricity generation, steel production, coal production, crude oil production, natural gas production, cement production, fertilizer production. So highest weightage is of 28% for the petroleum and refinery production, followed by electricity. Least is fertilizer production, right? So this is a important one. Now, cement, yes; fertilizers, yes; shipping, no; refinery products, yes; textiles, no. So 1, 2, and 4 only. Answer is A. So yes, these are the 8 core sectors to estimate every month to know whether they are performing well or not. This is released by DPIIT, Department for Promotion of Industry and Internal Trade under Ministry of Commerce. This together consists of 40.27% of the total industrial production in India. All right. Yes. Next, we see 2 previous year questions. Consider the following statements. Other things remain unchanged. Market demand of a good might increase if. So other things are unchanged. Just understand, if when the market demand is increased for any good, particular good, price of its substitute increase, price of its complement increase, the good is an inferior good and income of the consumer increases, it prices falls. So if prices of its substitute increase, right? You take example of coffee and tea. If the price of tea is increased, you will go for coffee. So that particular good demand will increase. The question is about particular good, that is, you can assume it is coffee. So the substitute is tea. If tea price is increasing, then demand for coffee will also increase. So first statement is correct. One should be there. Next one, price of complement increase. So you can take laptop and mouse or remote and TV. So if one price increases, other price also increases. So you need to use them together, right? So because of that, if complement price increase, the complement good price increase, the actual demand of good prices also increase. That's why demand get decreases. So second statement is wrong. You can eliminate one more option. Third one, the good is inferior good and income of consumer increases. This is wrong. If your income is increasing, you will go with the quality good, the higher branded good. So this is a wrong one. It prices fall, yes. If it prices fall, then it is demand increases. So answer is A. Next question. If a commodity is provided free to the public by government, then opportunity cost is 0, opportunity cost is ignored, opportunity cost is transferred from consumer of product to the tax-paying public, opportunity cost is transferred from consumers of the product to the government. So what is opportunity cost? You have an option to choose. If you choose that, you will be benefited, or you may also a loss also, right? So for example, I'm a farmer, I'm cultivating every year the rice. Now, as the monsoon is expected to be higher and government is about to give more subsidy for the fertilizers. So if I choose sugar cane, I will get 10,000 rupees extra. What if I cultivated the rice when compared to the rice? Now, I may choose it, I may not choose it, because I feel that if there is a failure or if there is no proper monsoon, I will go with the rice only. Then what will happen? The 10,000 which I could have got through cultivation of sugarcane, I have lost. So opportunity cost is the cost foregone because of choosing the alternate, because of not choosing the alternate option which is available, right? So in that case, here if government gives the free money to the public, it seems that C and B both are correct, but ultimately whatever the government is going to spend, that is going to collect from the tax paying public only. So that's why the most appropriate answer is C. So answer is C. So this is all from economics quick revision session. We'll come up with soon about the last minute tips. I hope you have enjoyed our sessions. If you have, please do like and share our YouTube channel as well as videos. Thanks a lot for your support. I wish you all the best from Team Karmyogi for your prelims on June 16th. Thank you.